is that how did operators manage in the last 2 years, and how do they look at investments coming into the sector?
Yeah, sure. So there are two parts to it, Sid. One is that how do we tide over this entire COVID period? I think, as Bharat would agree again, is that all of us who are sitting here today and still, in the growth phase, I think one of the things that helped us was our frugality. We were extremely frugal. We were not into that irresponsible growth model, and that helped us. Of course, we had to resort to all different sorts of measures. We had to reduce the salaries for a while. We had to let go of assets which we felt was no longer profitable. We had to go back to the board, negotiate with the asset owners on a revenue sharing model and not a minimum guarantee. We had to collaborate with, for instance, in our case, we collaborated with groups which were into essential services or manufacturing oxygen concentrators, for example, those kind of companies to take over the entire assets so that we at least keep our lamps burning. So I think we hustled, Sid. We did everything possible to keep the lights on. And in terms of the funding, ours is an industry, Sid, where we have the luxury of looking at both equity and venture debt, or debt financing. I think, I personally come from a technology background, and my previous venture was in technology and so on. Now, where debt financing is still a bit of a struggle, but when it comes to student housing, debt financing is a very viable option, and that is something that a lot of folks relied upon, not just venture debt, but even things like revenue-based financing, invoice financing, or you have working capital financing. And because the moment you look at those sorts of financing, your world is not just restricted to institutional capital or VCs or venture debt firms, but there are several beautiful government programs, Government of India programs, MSME schemes, and so on, which is available to us. So we considered and looked at and also kind of raised funds from both these options, and given the high gross margin and nature of our businesses, the repayments are relatively easier. If you look at venture debt or a pure loan, a term loan, a business loan, and so on. So that's how we went. In terms of the future outlook, Sid, yes, definitely, as I mentioned, the bullishness is yet to reach that pre-COVID level. But what we have seen, if I compare it to 6 to 8 months back, where I think it was extremely difficult even to get a foot in the door, with your model. But now I think we are definitely getting more positive responses. We are getting more yes than no's. 6 months back, it was the standard response was we would like to wait and watch. But I think that is slowly subsiding. A lot more investors are open to the idea of looking at it as a genuine asset class, whether it is a real estate investor, whether it is family offices, or even institutional capital. I think a lot of folks are realizing that now is the time to take a bet on it, because this is going to peak in the next 6 to 12 months. So I think it will, just like any other calamity or pandemic, I think the true nature of the destruction is always realized after the calamity, right? Not during it. So I think some of the long tail of COVID is still there, and it will take about 6 to 8 months to go away. And I think post that we would see significant capital flowing in. That's my hope. Sid, love to hear your thoughts also, Bharat.